From Washington, this is the HPS Macrocast with Hamilton Place Strategies and Markets Policy Partners.
Good morning. It's Friday, May 7th. You're listening to the Macrocast. This is Tony Fratto. We have John Fagan, Brendan Walsh from Markets Policy Partners with us today, and a special appearance on non-farm payrolls. Jobs Day is HPS Managing Director Stratton Kirton. Stratton, it's great to have you with us today. For, these days have kind of gotten, like Jobs Days are supposed to be big. And, it got to be something like kind of boring, actually, because you knew the number is going to be big, and it's just well, how big? We didn't have that today. We had a real miss by anybody who made a prediction about today's numbers. Do you want to run us through the numbers?
Yeah, absolutely. Thank you for having me. I think you're right. I think not only did we have a big miss on the numbers that we expected, we saw the Dow Jones consensus expecting more than 1 million, but we also saw the White House raising expectations for people to expect more than 1 million. And what we actually got in terms of non-farm payroll was about 260,000 in April, and we actually saw unemployment tick up to 6.1%. Go ahead.
Yeah, 266,000 on monthly payroll gains. I saw predictions as high as 2 million.
Yeah, I saw 2 million out there.
Yeah, which is it's not quite off by an order of magnitude, but it's pretty close.
No, it is
pretty close to an order of magnitude off.
But that's 10 times, right?
Yeah. So it wasn't quite 10 times off, but it was 9 times off. Just like pretty, a pretty big miss. As you said, Stratton, the unemployment rate increasing for the first time in a year from 6.0 to 6.1. A big revision in the March numbers as well, from what was the first print was 900 and some thousand. I think it was 777,000 on the revision. So it dropped something on the order of another couple 100,000 jobs.
But that's like 1.5 million jobs that we thought were created yesterday that weren't created.
Yeah,
that's right.
Yeah.
Yeah, I mean, it's interesting. So I think what we saw was, as we probably all know anecdotally, we've seen more people out, restaurants, traveling, all that sort of things. And we saw correspondingly a big jump in that segment, with 330,000 jobs added in leisure and hospitality, and even some more jobs added in local government, presumably as schools have reopened and support staff have come back. But that was also offset by temporary staffing agencies actually lost over 100,000.
That was utterly fascinating. You would think that's where jobs are being created,
Yeah, but if you're going through a transition back to in-person jobs, right? I mean, it actually does make some sense, but it's funny because on the restaurant numbers and hospitality numbers you just talked about, presumably as the story goes, unemployment benefits are so high to keep people out of those jobs, but really that is where we are seeing. We actually saw significant increases in job creation in those sectors, and not in the other sectors that have had employment problems.
And this is indicative of the point I was trying to make. And I was talking about it more from the upside, that usually when we come out of a recession, you can kind of put in your model. And, if we had 200,000 jobs last month, it's going to be 300, and next month would be 500. You go on a normal trajectory. This time it's just totally different. And next month might be 3 million. I don't know, but it's not going to be a normal
nobody knows, Brendan.
Recovery. Yeah,
nobody knows. Say 3 million. I'm going to say Brendan's predicting 3 million jobs.
But that's not a crazy prediction. It literally could be.
I know it could be. I mean, and I'm predicting that if you say
maybe not May, but June could be 3 million. Yeah.
If I'm telling you, if your prediction is 3 million, I'm going to say you will not be farther off than than the people who are off it for April.
Yeah.
Okay.
And most importantly, it speaks to Jay Powell's point that this time it's different. So I'm not going to shoot until I see the whites of their eyes.
Do you guys, John or Brendan, have any idea, how the how the models predicting this could be so far off. I mean, I like we don't do, you know, we don't do a model of
So I used to have a
model job creation, and now I'm convinced that literally nobody actually does. So honestly, because you cannot be this far off and actually model. You're not. I don't know what you're putting in.
So the best predictor for in your model, so I had one in my old job. It's claims. That's like 80% of the prediction rate. And then the other one is actually the ISM jobs number. That has a very high one. And then we would use the Google data. And those are kind of the three best predictors. But in people's defense, the unadjusted jobs number this month was 1.1 million. So the BLS is having a very difficult time seasonally adjusting these numbers because we just went through something that's never happened.
Yes,
so
that's true.
This number might not be as bad in reality as 266,000. The unadjusted number was 1.1 million. But it also, we usually create like 700,000 jobs in this month on an unadjusted basis.
Yeah.
So everyone is having a hard time because
that's true. But some of the other things to glean. I don't know if someone has looked at workforce participation. I mean, I think the expectations were that it was going to be pretty high. I don't have it in front of me. One number I did see, and so if someone could just take a quick look at that.
So it went from 61.5 to 61.7, which is good, but it's not enough to and especially the female component that left the labor force to take care of kids, that we're just not seeing enough of the schools and daycares reopening to bring that back. We're a couple million short, right?
Yeah, and it makes you wonder if we don't have, if daycare is still having that problem, and also if even the summer camp scene doesn't come back, it still gets really hard for
families. And that's what I was thinking about, that we did see a slight uptick in employment at child care centers, which is a good sign, but we're heading into the summer season between unemployment insurance, schools going out for the summer. It seems like that those are probably pretty significant constraints until we get to September.
And the unemployment insurance goes through, I think it's September 7th, the exact date.
Yeah.
So, I mean, while the pandemic unemployment assistance did a great job, but it might now be fighting against us.
There's there seems to have been and continues a misunderstanding of what some of the point was of the unemployment insurance bonus. At the time, it was when it was first set at the bonus at $400. Now in the recent bill was brought down to $400 a week, brought down to $300 a week as a top up bonus. Part of it was to smooth out the differentials in unemployment insurance across states. But there was an overarching desire to, in fact, keep people out of the workforce. Right? You did not want people feeling the desperate need to go to work where they could be spreading the COVID virus. So that's why you create the opposite incentive, like a big incentive to stay home. And to your point, Brendan, like it worked.
Yep.
Now is it working too much as we're trying to go back? I think there's a lot.
And anecdotally, that's what we're hearing, especially
we hear
at the restaurant.
Well, and it is also showing up in the wages at the lowest levels are actually rising at a fairly strong clip. I think I saw 0.7%. It's something translating to something on the order of 9% of wage growth for the year, which is very strong. And part of that is that employers are probably having to pay premiums to get workers to come back. That's you can cheer for one group, obviously, but also the costs for a lot of businesses are could be rising as well. But we don't. It's all anecdotal right now. We don't have really strong data on a lot of this right now. One thing we did see was the work from home has come down pretty significantly. So that was one thing I noticed was, work from home was in the 35% range a year ago. It's now under 20%, had been in the between 20 and 25% for a number of months. It's now down to about 18%. So 1 in 5 workers only working from home now. And so, whatever that means for the quality of jobs and how people are working, but that is one trend that I noted. I think that's a positive one, because that means that businesses are looking to be more active and they want their workers at home. Jamie Dimon saying this week he's tired of the Zoom calls, and once everybody back in, he's canceling all his Zoom calls. The troubling number I saw was the core unemployment. So workers who are not unemployed for temporary unemployed for transitory kinds of reasons, that number is staying stubbornly, pretty strong at around 6%. So that's not a great number, and we'll keep an eye on that as well.
And we still have somewhere around 8 million people that are still unemployed. That's a shocking amount of people.
Yeah, it is, and we're not going to get to them at 266,000 net jobs in a month.
No, I'm not a math genius, but that's going to be a few months.
What I would say is, if I were trying to find a positive spin on this, what I would say is, for the CARES Act, we obviously saw the direct payments go out very quickly. However, the other components of that money still haven't gone out or just starting, like the restaurant relief program. I think literally started taking applications yesterday or sometime this week.
Yeah, Biden went. I think he actually delivered that first check to the Union Station, right?
And then state and local money isn't required to go out until May 10th, so 3 more days from now. So that's another $150 billion, I think, that's going to go out soon. So, I mean,
let me ask you from a political perspective for the infrastructure spending. Is this jobs number helpful?
I feel like Tony probably has a better answer on this, but I could argue either way. If I'm sitting in the White House, I say this shows that, we need to do more. If I'm sitting on the other side of the aisle, then I'm going to argue that, these policies are already showing that they're failed. Big government's not going to.
That's a good point. Yeah.
I don't think it changes the political dynamics. People are going to see what they want out of this.
Yeah, well, I suppose the odds of passing a bipartisan infrastructure bill. Yeah,
I'm not sure that it makes much of a difference. I think you can argue it either way.
I agree.
I don't think. Because we know that we're going to have, at least 2 more prints before.
Maybe 3 or 4.
Yeah, so be very careful about tying your rhetoric to this number, because we could see the big blowout number next month as well, and that's going to upend your messaging. So always, as we teach at HPS, when you're talking about messaging, think about the durability of it also, not just in the moment. I suspect they're probably doing the same thing.
I miss following Trump's tweets before the jobs number, when he would get it. Those are the days.
I don't love them. Hey, let's take a break. Come back. We had one of the interesting moments of a former Fed chair.
Is there a phrase for that?
I don't know. Former Fed chair, current Treasury Secretary Janet Yellen, stepping in it a bit.
Never happened before, so we can create the phrase.
Yeah, once or twice it's happened. We'll come back and talk about it on the Macrocast.
On the first Friday of every month, HPS analyzes the latest jobs and labor market data in a digestible format. Sign up for our reports at hamiltonplacestrategies.com or on Twitter at HPS Insight.
All right, we're back on the Macrocast. So we have this unusual situation where we've got a Treasury Secretary who used to be chairman of the Fed. And, if you've listened to this show and or Jay Powell's, press conferences and speeches and interviews over the past few months where he has, tried to tamp down the notion that the Fed is even thinking about inflation and raising rates or tapering. And he's tried to really message very strongly to the markets that they shouldn't be thinking about that. That's not a worry. They're looking through that, and he said you're going to see some of it, but we're not going to react to it. When you had the former Fed chair, now Treasury Secretary, essentially say that with inflation is probably going to come, and the Fed's probably going to have to react to it. And the Fed has the tools to react to it, and they will tamp it down when they see it, which is not is kind of discordant with what Powell has been saying. And having worked for 3 Treasury secretaries and gotten to know, 4 others, 5 others. Treasury secretaries say a lot of things. Sometimes like we try to have like within a range of discipline, and there's a unwritten rule that the Treasury Secretary shouldn't talk about the Fed policy rate, and Fed chairmen shouldn't talk about the dollar. And one of those was definitely violated this week. It wouldn't matter so much if it was one of these other Treasury secretaries. Maybe it would matter if it was, Larry Summers or Bob Rubin.
Yeah. Best was when Mnuchin said that the banking sector was sound from Cabo when we weren't worried about the banking sector.
Right. You can discount it. It's hard to discount it when it's your predecessor, who is the former Fed chair. I mean, she led that institution and has views on it and knows how to think about how the Fed thinks. It was definitely an error. And how did people think about it, John?
Well, there was kind of a record scratch moment on Tuesday when she said it, and it was ripped out of context. I'll read it now. It may be that interest rates will have to rise somewhat to make sure that our economy doesn't overheat. That's a little bit of an inflammatory statement in the current environment where market participants have been very, very concerned about economic overheating. And in the context of impending spending by the Biden administration through the American Jobs Act, American Families Plan, that sort of thing, which Secretary Yellen has defended. So there was a real lurch in the markets in response to it. It wasn't necessarily that the futures markets gapped over to price in an accelerated rate hike, but there was just some confusion over the crosstalk. The dollar rallied and risk assets sold off. And there was a sense that, perhaps the Treasury and the Fed weren't in the same place. But she ended up walking the commentary back later in the day, saying that she was neither advocating nor predicting a rate hike anytime soon. In the context, you can see that perhaps she wasn't really talking about policy rates. She was talking about Treasury yields, that Treasury yields might have to rise to account for better growth outcomes. That's something that the Fed has said, but it was, perhaps the phraseology wasn't what she would want it to be in hindsight. So this gave the markets a little bit of a pause, but it contrasted pretty significally with the rest of the commentary from current Fed officials this week.
Yeah. To be fair, look, look, what she stated is by the way, it's basically just an orthodox observation, right? So
it was a bullish view.
Well,
she's saying
I think that's right. If you'd said interest rates may have to go up as the economy really gets going, but she used the word overheat, which I would think probably from a cabinet member, you would not really want to be.
It was
Cinco de Mayo. It's no bueno.
No question. It was a mistake. She should not have said. The easiest thing to say, if I was back in one of my old jobs of advising people on how to talk about these things, like say, what if you get a question on interest rates? Well, what you say is, Jay Powell says, and then you repeat what Jay Powell says. That's your answer on interest rates. So well, we don't set interest rate policy here. Jay Powell says this, that it's not, he's not worried about his time to deal with it. And so you quote the Fed chairman, then you never have any problems. I'm not saying anything. I'm pointing to you to what he said, and that's probably fair for the same thing for the Fed chair to say, when he's asked about the dollar, it's like, well, Secretary Yellen said this about the dollar, and point to what she said about the dollar. And that way you keep everybody in their, in their lanes and respectful of things, and the market will, I will look past it. But making just the observation, and by the way, a lot of the things that were that are gaffes, that we consider gaffes by Treasury secretaries, and I was around for a few of them, were things that were merely sort of, observations, but not great in context. I remember, Paul O'Neill. Paul O'Neill said, said to a German newspaper, it was on his first G7 meeting, and he made something that was in German, in a German newspaper, and asked about the dollar. And he said, we don't have a strong dollar policy. What he basically said was, we don't have a strong dollar policy. We have a strong economy policy, right? So it's not like he had a view I shared, which is that, it doesn't, the tail shouldn't wag the dog, right? Like you got a strong and happy dog, you'll get a good wag on that tail, And I think that's the right way to think about the dollar, not the other way, around. If you're strong relative and you're a good, strong investment environment that attracts investment and attracts demand for your currency, like your currency is probably going to be relatively strong. Well, that was treated as the Americans abandoning the strong dollar policy. He said something about, was asked about, when Brazil was going through a financial crisis and seeking a significant IMF program loan, and he was due to go visit Brazil in a week. He made the comment that it would be good, Brazil needs to focus on is having strong institutions so that money goes to help people and not into Swiss bank accounts. Now, again, very indelicate, insulting. Even I think I remember a call coming in from Secretary Rice complaining about the diplomatic mess that he had caused by insulting the Brazilians that way. Anyone who knows Brazil, and I know Brazil really well. I'm on a business school, board of a business school down there, and spent a lot of time in Brazil. There's a corruption problem. No one's surprised. There's a corruption problem in Brazil, famously so, and it would be better if they had stronger institutions that were. But that caused the real to fall by 5% because which is huge, right? Enormous. It really is, and you were obviously on the front lines of this. Communications about the dollar are so touchy. Yeah. And that's maybe, one of the things that you spend so much time on in preparing for some of these questions about the dollar, and the messaging, as boring as it is always the background analysis that goes into the communications. There's a lot more thought process and consideration than may appear when you end up with kind of anodyne statements like, we support a strong dollar or something like that. It's Secretary Mnuchin very early in his tenure, in his first visit to Davos, found that, even reasonable sort of discussion about, but obviously anybody could see the benefits in a weaker currency. that was all it took. And, one of the very interesting things, just since we're on this subject, President Trump moved the markets all the time with Twitter, constantly. Whether he's talking about U.S.-China relations, when he was talking, he was always pushing the market around, and this was by design. He liked that, and would obviously have Fox Business on in his office. And one of the things that was notable was that he shot his mouth off a lot about the dollar, and it never moved the dollar at all. Yeah. But Mnuchin had one little stray comment, and the dollar yo-yoed like mad. And I think that was a really interesting case. There was a sense that,
even in the Trump administration, the dollar policy is so heavily compartmentalized in the Treasury that even as powerful as the president is, he really couldn't move the needle on the dollar.
Yeah. And that's also so when Paul O'Neill mentioned it, like the market didn't realize it until the next day when they read it in the paper. Now everything's real time, and also it's not even humans that are trading; it's computers. But it's kind of amazing that the computers realized that the Treasury Secretary is the one that matters when it comes to dollar, and the Trump tweets didn't matter.
It's true, but as I remind people though, like the dollar policy is it's America's dollar policy, right? And like the Treasury Secretary can't change it by just saying a couple things, right? Like there's actually some process and thought on what we think of as a policy, but the policy really is. I spent years on this, right? It's just trying to say. Trying to say things that are, true, observable, and get you out of having to, elaborate on where you think the dollar, quote unquote, ought to be. Because the part of the perception in the market is that you have a view, not necessarily on where you want to push or pull the dollar, because you can't. This is like the dollar market is too big. For even Treasury to do something about it. The Fed actually can do something about it with, by adjusting, adjusting people chasing yield, right? I mean, you can like that will have an impact to some degree, have an impact on the dollar. But not much a Treasury Secretary can really do. It's that they think you have more information on where it might be, on it might be going. But I'll tell you, maybe I'll just end on this is, Paul O'Neill, again, like who's a font of these things and was really a delightful person to work with. He once famously said, I'm not sure why anybody pays any attention to, I'm constantly amazed that anybody pays any attention to anything I say. And that may be the most important thing. Like words, you can't jawbone the dollar. You really can. You can cause a market disruption in a day, but you can't really jawbone the dollar market. There are just too many factors.
Just think about how many dollars get exchanged in the course of a day, not traded. Just like, and that's the big point of the dollar, is Wall Street trades it, but what really moves it is Visa or UPS, they have to move dollars across.
I don't remember what the the dollar market. I mean, you guys may have better data on this. I mean, it's like it is many trillions of dollars a day.
A day, yeah.
A day. It's like and people look at the economic or the stabilization fund, the ESF, where they use for
exactly
right.
Yeah, how big is it? It's like you got a couple $1 billion that you can intervene.
Yeah. I mean, I remember when my time there was something like $38 billion, right? Like, I mean, like, what are you talking about? And at that time, the dollar market was a couple $1 trillion a day.
Right. It's literally like 4 seconds of trading.
Yeah. It's just not. People have this memory of the old days of James Baker and the Plaza Accords, and where the countries can come together and try to manage exchange rates, and it is just it's really, really hard to do because of the explosion in cross-border financial flows right now. It is really, really hard for any one country, and especially because especially in the case of the dollar, because the dollar has become even more entrenched as the global reserve currency, not less. When we come back and talk about the probably the biggest issue that is impacting the U.S. and global economy is the vaccine rollout, and had a some big decision this week, potentially big decision. We'll see whether we all agree on this or not, involving vaccine patents and whether this is going to make things better or worse. We'll come back and dive into that in our last segment on the Macrocast.
Markets Policy Partners provides sophisticated financial market analysis that is independent, accessible, and actionable for a broad audience. Learn more at marketspolicy.com or visit them on Twitter at marketspolicy.
All right, back on the Macrocast. So the Biden administration had the U.S. Trade representative put out a statement this week saying that they would support efforts to loosen or lift make available the patents for these really miracle vaccines, and as I say, at a time when while we are all feeling really good about the direction of COVID and the vaccine in America, it is pretty horrendous in places like India and maybe other places to come that could really use these vaccines. John, is this something that's going to help?
This was there are a lot of considerations. It's a highly complex issue, and there are people that are much more deeply expert in this than I am, of course. So with that said, a lot of the commentary that came out in response to it was pretty critical. And it was centered around the idea that this isn't going to help the situation in places like India, because it does nothing to address the unavailability of the know-how to make it or the proper facilities to do this. It could actually end up pulling some key inputs and supplies away from the more efficient supply lines that are already established, and there are just better ways to accomplish this mission. There's the other argument, which is more you hear very much on Wall Street. This is stifling innovation. Pharmaceutical companies need to be able to profit from these drugs, or they're just not going to have the incentive to develop. These are very expensive propositions, and the defense. The defenders, at least the ones that I've heard, were, a little bit more general, which was this might help, and at least it's something. And it shows that the Biden administration is at least, bringing something to the table to this issue. It just seemed like at first blush, from where I sat, it was the critics kind of had the upper hand. So I wanted to dig a little deeper and think about, the case for the defense. And so we talked with some of our friends in the medical field, actually the epidemiology field, and some other stuff. And so when it comes to the defense, I guess it kind of boils down to three main points. One being the government was very, very wrapped up in developing these vaccines, not just the Operation Warp Speed, which the Trump administration was kind of incapable of taking credit for because of they were so busy denying it on one side, and they didn't necessarily hype all the good works that Operation Warp Speed did with the same kind of megaphone. And but that doesn't take away from the fact that the government put billions of dollars into these R&D programs. And actually, what I didn't know was that the development of the innovations that are the foundation of a lot of these vaccines were developed in conjunction once upon a time with the government. And so this is and the government and the government's buying all the vaccines. And so this is very much, it isn't just like the drug companies spent all this money and now the government's shafting them. It's a lot more complex than that. So that's kind of point one. The second one is, when they say, well, this isn't really going to help the situation right now, there are better ways to do, to put vaccines into places like India, release the stockpile, do more to do that. This isn't going to help. I think that's a little bit hard to refute, that there's a better way to do this, but that doesn't mean that this is a bad policy. Assuming that you're in the Biden administration and you say, well, look, this is just, we're going to have booster shots. This is going to end up being a public good that is just out there. We're going to have to go to generics really early, so we might as well just get it going now and use this kind of time frame to start it out and at least get the debate into the WTO. We're going in that direction anyway, so let's just kick it off. Yeah. And the third one that we kicked around was the drug companies they know all these risks, right? And so when they're pricing their drugs, they have this idea factored in. This was not a shock to the pharmaceutical companies in the way that it was maybe a shock to some of the rest of us. They contemplate the risks of what the government can do to them and do to their business prospects. Surely they had a lot of this, sort of in their models, in their thinking, and probably didn't take them by surprise. On the, the drug companies you could always argue the drug companies could do more. They've done some things to make this more of kind of a PR campaign. AstraZeneca said that they wouldn't profit off the COVID vaccine. And there have been some, movements with the others around parts of their, opening up some of their processes. So they acknowledge that there's something there, and they could have done more to make this a very public kind of friendly approach. They priced it, so they're definitely getting a lot of profit, and the government is responding in a way that they probably already predicted might happen. So
yeah, I don't know.
Those are the cases for the defense that the defense rests.
I'm going to take the other side on that, John. I'll tell you why. First of all, I don't really care what investment went into it on the front end. To me, the important things of warp speed were two things. Not that there was surety of the money coming to develop the drugs. That was like incidental. These guys knew that there was going to be an enormous market for this one drug that the world is going to demand, and not just demand in poor countries, but demand in fact, the strongest demand in the richest countries in the world. They weren't worried about selling their drugs. The government had an interest in distributing the drugs, right? So the government said, let's just buy them all so that we can just give them away to people, because our interest is everybody getting vaccinated. So that's how that worked. And then what they did is warp speed, essentially cleared the highway for COVID drugs to go first, to just get in the fast lane and go, and all the other drugs all the other things from, psoriasis to wherever, we're told, stand aside, get in the slow lane. We're letting these drugs go first. So that was great. And warp speed should get credit for that. Warp speed should get credit for the advanced purchases being able to allow for distribution of the drugs. There is no question that this idea that the drug companies should have known that the government was going to lift the patents was just, I disagree with that completely. I don't think any of these companies would have gone in to be part of warp speed in any way if they knew that the government would just, and I'm sure that they got assurances that was not going to happen. And where there are practical problems on this are that, we saw, if you go back to the financial crisis, right? I was in the room when, there were discussions and decisions being made about, encouraging Bank of America to take, Countrywide, or JP Morgan to take, WAMU or whoever, right? And the idea was that you bring, like the troubled bank into the good bank, this is a good thing. Let's help it happen if there's a company that's going to go do this thing to create, again, a public good, right? We don't want bank collapses. Well, there's not a bank that would do that today in another crisis. But what happened? When Bank of America takes Merrill Lynch, what do they get? They get beat up for years afterwards for having done that thing. The thing that we encourage them to do, we beat them up. Pharmaceutical companies are not going to participate in the same way, and not without lockdown assurances on a lot of these things. That's going to damage things in the future. Those are perspective things. In the current period, we have incredibly efficient producers of these drugs, and these drugs are complicated to make. They require a complicated supply chain of ingredients to be able to build them. They need sophisticated places and talent to actually make them. Now you're going to sort of blow that up and draw resources in multiple different directions at a time when what we really, really need to do is produce, as much as we can. But the constraints are not that there aren't enough companies doing it, it's that there aren't enough resources and there aren't enough talent to do it. And this isn't going to solve it. And I really do think it's probably going to make things worse. Now, I do think, and I've been clamoring for rich countries, and especially this one, to lead on the strategic distribution of these drugs globally. And that might mean that fewer Americans are going to get shots because we want to make sure that we limit the spread of the disease as much globally. That is a hard political thing to do, but that is a much better solution than this thing, which is an easy political thing to do, right? Just slap around the pharmaceutical companies.
Yeah. It's
right?
just reeks of
easier
a
to slap
political
around the
decision.
pharmaceutical companies than it is to take the tough decision on strategic distribution of shots.
And I tell you, my theory on the people pushing for this is that it actually had very little to do with the COVID vaccine itself, and that it's the same groups who, are always at the WTO asking to weaken IP rights. And so I think they saw what you just described, Tony. It's an extremely difficult political decision that the Biden administration has right now that they're not likely to make to ship vaccines overseas. So they saw this as another area where they could push and then break the U.S. history and precedent of defending IP rights at the WHO, full stop. Because for decades, Republican or Democratic administration, it didn't matter. The U.S. was consistent on its policy before the WHO. And I think this starts to create a track record of weakening that. If we did it for COVID, why shouldn't we do it for these other life-saving drugs in the future?
For sure. Yeah. I think that's a real issue. But look, these things are really complicated. I mean, the Moderna CEO said, he was asked, is this going to make any difference for you? And he said, no difference. Why is it going to make no difference? Because the constraint isn't you could, essentially what he's saying is you can print the patent on, perforated rolls and make it available to everyone. They can't go do this thing. This mRNA is a very complicated, challenging thing to do. And then even what we saw with the Johnson & Johnson.
Exactly.
Right. We have a real life example.
That was an easy one.
Really, an easier thing to make. They had to throw out 15 million doses because of contamination, not in some lab in a country where it's maybe more difficult to maintain those environments, but in Baltimore, in a sophisticated lab that makes lots of other drugs. That's how.
And then the government came in and said, Merck, you're going to help Johnson & Johnson produce this. And Merck said, all right, we're game, but it's going to be like December by the time we can start ramping this up. Yeah.
So look, I don't know if it's going to help. I do think, I'm very, obviously, very, very concerned about the spread of COVID in countries that are really ill-equipped to deal with that wave. I mean, the truth is, not even Italy and the United States weren't completely equipped to deal with the waves, let alone countries that have much less sophisticated healthcare infrastructure. So it is a real challenge, and we should remember that however way we're feeling good about the U.S. economy today, the real durability of it and strength going forward is going to depend on the rest of the world getting.
No, you're right. And it's in our best interest to help because we're vaccinated against the current the virus, but variants could change that whole thing. So it's in our best interest to ship out a lot of vaccine. And it seems like we've kind of given up on getting vaccinated. So we might as well put it to better use.
Indeed. Well, we'll get to see whether whether it has an impact or not. That's things. We'll see whether anybody can pick up the patents. Depending on which direction WHO goes, and I assume they will go in this direction. We're going to have a real life experiment to see whether it helps or not. Guys, thanks for great podcast, great Macrocast today. Stratton, fantastic to have you with us.
Awesome to have you.
Yeah, we'll have you back.
Thanks for having me.
Maybe with a less adventurous jobs report. But adventurous jobs reports are the fun ones. That's where you want to be in for these.
Well, next month is going to be 3 million, so we'll have you back for that.
Exactly. Thanks, guys. Have a great weekend.
Bye, everyone.
Yeah.
Thank you for listening to the HPS Macrocast. Please remember to subscribe, rate, and share.